Time for some business news now, and Yuka Royer is with us in studio to take us through all the latest updates. Yuka, going to start, I imagine, with that growing tension between the US and China striking back with some of its own tariffs.
That's right, a tit-for-tat moves, as you say. China says it's a retaliatory measure against Donald Trump's planned recent decision to impose additional tariffs on steel and aluminium. Now, Beijing has announced additional tariffs of up to 25% on some $3 billion worth of American goods. Here's all the latest from Georgina Robertson.
China hits back, slapping 128 US products with new import tariffs. The highest import tariff of 25% applies to 8 products, including pork and scrap aluminium. 120 other products, including wine, fruit and nuts, will be subject to a 15% increase. All this on top of existing duties. It is a retaliatory measure against Donald Trump's recent tariff hike on steel and aluminium imports. Many Chinese consumers stand behind the measures.
I think it's absolutely correct to impose tariffs, because I've seen the news about the US scrapping trade deals with us. It's absolutely right to fight back.
If the US impose tariffs on some Chinese products, we should, without doubt, tax the United States on their products.
But caught in the tensions, these measures have left US farmers feeling jittery about their livelihoods.
Over a third of the value of a hog comes from exports. So you take those away, obviously, and we're struggling to make money right now raising hogs. You take that away, it would decimate the pork industry.
Observers see the moves as mere political posturing. China's retaliation affects $3 billion of imports, a tiny fraction of the total US exports to China, which last year amounted to over $130 billion. A bigger conflict is brewing. Donald Trump is set to move ahead with his plan to raise tariffs on some further $60 billion worth of Chinese goods in a spat over technology and intellectual property. China has said it will not stand by while its economy is hurt.
Well, let's take a look at how the markets have digested the news. The impact of the latest escalation in trade tension seems to be limited. Trading was calm in Asia on the first day of the month. But Tokyo, as you can see, dipped into negative territory in late trading as investors locked in profits. Shanghai also down 1/4 percentage point, and Seoul's Kospi down just below the flat line. And the market in Hong Kong closed for Easter Monday. Now, most European markets will also remain shut this Easter Monday, but let's take a look at what investors may be focusing on in the weeks ahead. The trade tensions in some key economic data are very much in focus. As we just mentioned, trade tensions mounting between the world's 2 biggest economies, but also there are jobs data, manufacturing data coming out later in the week. The technology sector will also remain under the spotlight. Many are focused on when and how Facebook's top brass will come out and say they will testify or not before Congress in the US and the UK. Now, some more of the day's business headlines for you now. Corporate sentiment in Japan has worsened for the first time in 2 years, according to the Bank of Japan's quarterly outlook. The optimism index, known as the Tankan, fell 2 points to 24 from December to March. The figure reflects growing concern over global trade, but it also could be a sign that the Abenomics growth momentum is running out of steam. Hudson Bay, the parent company of department stores Saks Fifth Avenue and Lord & Taylor, has confirmed that hackers stole customers' credit card data. The breach of its store payment system could have affected millions of shoppers. Over the weekend, a security firm in New York said hackers had put up information on 125,000 credit cards for sale on dark websites. New car registrations here in France increased by 2.2% in March compared to the same period last year. The pace was slower than the first 2 months of 2018. The new figure brings the quarterly rise to 2.92%. More than 500,000 cars have been sold in the first 3 months of this year. Now, finally, from me, business has been tough for Tesla lately. The electronic car maker has been bogged down by a mass recall, production delays, and a fatal accident that called its autopilot technology into question. Last week, Moody's downgraded Tesla's credit rating further into junk. making it more expensive for Tesla to raise money through bonds. The company has yet to turn a profit in its 15-year business, but CEO Elon Musk apparently isn't too worried. On Sunday, he tweeted a series of April Fool's Day jokes, as you can see one of them, saying Tesla goes bankrupt despite intense efforts to raise money, including a last-ditch mass sale of Easter eggs. Now, Tesla, of course, hasn't sold Easter eggs, but some might not even find the joke funny. Some analysts have been suggesting that the company may be just months away from actual bankruptcy.
I have to say, Yuka, I admire his defiance, but I'm not sure I'd be strong enough to have that kind of sense of humour.
He must be great.
Thanks a lot for that business update, Yuka Royer. Well, it's time